everybody. Good morning. Welcome to the State of the Market. I am your host, Hans Albrecht. I was a pro options market maker for 15 years. 15 years of slinging stuff around. It was a lot of fun. Traded a lot of long stock, long gamma. A lot of that means basically long options, playing for swings, which was really, really fun when things got very, very volatile. And that's part of why I'm getting even more excited about this market as we go into the fall. I think we're going to have potentially a pretty nice melt up. And so after that, I was a fund manager for 10 years, doing income funds, right? So generating income on all kinds of assets, underlying tech stocks, underlying things like gold, commodities, natural gas, oil, and finding ways to basically generate income on those things. So very, very deep background in both the leverage side of the options game as well as the income side, right? That's how you have to look at those two worlds. You look at options as the two kinds of separate worlds of long leverage versus short leverage. And so let me share my screen here for you guys. How is everybody doing? How is everybody feeling on this beautiful, beautiful August morning? It's pretty nice here. We're actually heading into a heat wave for the next week. It's been a very hot summer. It's been hot for AI, but it's a very, very hot summer temperature-wise as well. So let's look at some of the things that I'm thinking about in this market. So we got S&P doing fine. I think it's having a little trouble. We've seen some of the flows, right? So if any of you have watched my show before, I talk about flows. I talk about how for the last 700 or 800 points, institutional money wasn't in, right? And they've just recently started piling in. So guess who was right this time? It was the retail trader. The retail trader got in, was buying all the way up from those lows. Very, very smart. You know, they call the retail money, they call the institutional money smart money, but it hasn't been smart this time. In fact, in probably 30 years of having done this, I would say that I've never seen the so-called smart money be so offside. I've never seen that before, where they got it absolutely unequivocally wrong. That's hard for me to say. They got it totally wrong, and retail got it really right. So I think that's kind of an exciting thing when of course, we've seen the retail trader wield more power than ever, right? Since COVID, since everyone started to get involved. 60% of options trading now is 0 DTE. So there's a lot of gambling going on. There's a lot of gambling going on, but people are taking the bull by the horns and really just kind of going for it, right? So some of the things that I watch, we can see skew. So people are starting to buy a lot of puts. Again, I think that's important. So we can look at the VIX, but the VIX is kind of in fairly tame territory, down in the sort of 15, 16s, which is kind of almost the new 12, the new 13, 12, 13, right? So we're in a new era versus sort of the 2010, 2020 kind of regime, which was sort of a lot of low volatility sorts of markets because of QE and sort of stimulus and all that stuff. So we're in a bit more normalized environment. So I'd say sort of a VIX 14, 15 is a bit more kind of the low vol environment. So we're seeing people reconsider, so that institutional money is coming back in and it's saying, oops, we better get involved. We don't own all these hot stocks. We haven't been on board. Our talking heads have told us to get out in April. So they're getting back in. And I think they're buying stock. They're buying, in the money calls. I think they're buying out of the money calls. They're getting involved in markets again, but they're also hedging, right? So we see the skew really pushing up. That's basically an indicator that people are buying out of the money puts. Now, some people look at that and say, well, is that bearish? People are buying lots of puts. Some of it could be, but the way that I interpret that is that people are getting long. They're starting to prepare for a potential run, and I think we have a good chance of getting to 7,000 this year. That's my personal belief. I've been super bullish since about 5,600. I said the pain point is up. The pain point is up. AI is changing everything. Anybody who's watched me knows that that's the case. I've been screaming from the mountaintops to buy some of those sort of foundational level names, right? And that's what we've been doing in Turbo Income. That's what we did in Special Situations. Special Situations AI, we just took off we took off one huge winner on Palantir, and we've got another one in NBIS, which I said at the time we did the presentation, I said, this is your much cheaper, better version of CoreWeave. And what has happened in that time? NBIS is up 70%, and CoreWeave is basically up like 5 or 6%. So some good calls there. I think it's still a great play. It's a bit more of like a smart data center play for Europe, overseas a little bit more, but really a great company that is going to reap the rewards of increasing needs for data storage, for compute, for all the stuff that we're talking about all the time. This is not, stocks don't always go up and down, don't always go up, they go down as well, but this story is not going away, right? At some point we're going to get a big pullback in stocks, because if you were around in the 90s, if you're around for other kinds of fevers, you do get a little bit of ebb and flow. But the story is incredibly strong. We are going to build out AI, especially this inference stage, for the next 5-10 years. Is going to be full speed ahead. So if you're not on board with that, you are going to potentially be missing things. And in Turbo Income, we're doing more and more turbos. We have not had a losing turbo this year, by the way, the turbo plays, which take advantage of both an income piece and an upside leverage piece. We just closed a trade for 218%. 218%. Why people aren't signing up for this by the hundreds, I have no clue. I guess some people don't like to make money, but this is it. Let me show you guys. Some of my other thoughts here. Let me just check the commentary. I don't like to get too distracted, because you guys like to distract me, especially some of you know who's like to get me involved. Target risk reward. Let me see here. CCJ, I've got boatload. Power is just huge. Power is absolutely massive, right? We are not going to have enough power. The existing infrastructure cannot handle what is coming. That is such a great narrative. Now, the stocks have run up a little bit, but this is one of those strong areas. Let's see, what have we got? Surf Dance and Hogan, Shane, happy Friday, everybody. WA, I call them crooked money. Who's the crooked money? The crooked money. Oh, the institutional, the smart money, right? The smart money that's scrambling and going, what? You know what? Even I love Josh Brown. I love Josh. Yeah, time for another Turbo Income webinar, Enzo. Like this stuff is a no-brainer, and I'm calling this stuff. My personal trading portfolio is up 100% this year. The names, we also get a long-term portfolio when you're a member of Turbo Income. You get my long-term portfolio, which is up 36% versus 7% for the S&P. That's good. But the way you turn that into 100, 200%, the way I did that is by really pushing into the right kinds of trades, right? That's just stock. How do you turn 36% into 100+%? Or if you're just trading options, how do you turn that into 300%? Yeah, CLN just said Hans's trades have paid for a lifetime membership many times over. So, we're nailing it. Why you're not clicking get involved. Okay, I'm going to stop pushing that. I'm going to keep showing you guys some stuff here. Vega net positioning, that's showing basically you've got a gamma imbalance. So what that means is if we do get a sell-off, it always has the potential to snowball. That's not my base case, but people are starting to really lean very, very long. So in my view, it's starting to be a situation where you start to look at a little bit of hedging. So my plan for the fall, and really right now, I'm not waiting too long, is kind of full bore long with protection. Yeah. MTI is really giving us some beautiful some beautiful runs, right? That's how we use the MTI to give us that extra super layer of, listen, this is where in the world of income trading, and I watch everybody, and everyone's an options expert now on Twitter, right? Every accountant, marketing guy, back office turned option trader expert, everyone's an expert now. But there's really, you find people that are mostly kind of option sellers, which is sort of the traditional income trade. And that's fine. You just do your selling. Okay. You want to make, $4 or $5 each time. That's a terrific way to go. I have people come to me, they're 7 years old. They go, listen, I'm all about the income. I don't care if Palantir is going to triple. I want to generate income. And that's 100% terrifically a great approach. Now, our approach is strategic greed. It is income, income, income. And then when the MTI gives us the full bore greens, when we get all these positive things happening, then we push. We get into trades that take advantage of upside, but we finance those, right? And that gives you patience, right? That gives you the ability to be patient. What's one of the problems with options? You buy options, you've got decay, you have to be right very quickly. You've got to be right today. You've got to be right tomorrow, certainly by next week, or you start getting nervous. What if you had a strategy that enables you to not have to be nervous? Then you're starting to manage your emotional capital. Turbo trades do that. I can be wrong for a little bit as I wait to be right. And that's a very, very powerful thing. Nobody talks about emotional capital. It is 100% key. And that's what a lot of tools, good tools, can give you. Not the slingshot trade or some cook, this guy on YouTube, he's like, I'm a chef, but I've got a really, really great strategy that my cousin showed me and I want to sell it to you. Holy moly, you got to be kidding me that people actually sell those things. People actually click on that stuff and buy it. I'm like, this is amazing. But of course, everyone's looking for a way to make some extra money. And I think this next couple of years is going to be a phenomenal market for that. So let me show you a couple of things I'm watching. Let's go to our dashboard and let's look at some of our charts here. Let's get a feel for what's happening. So we're going to start right from the top here. We've got XLU. So this is your utilities versus SPY. So these are my relationship charts, right? So if any of you watched, if any of you watched our presentation on turbo trades, on turbo income, we talked about the breakout ratio. So I'm going to show you that in a moment. But here we go. We see utilities really go for a little run. So utilities are a different animal now, right? They're not your boring old sort of, power companies and things like that are more like just kind of cash flow machines, boring, regulated. They don't make too much money, but they make enough and everybody needs them. Okay. Now we're starting to enter into this AI inference phase, which is where power is needed. So you've got kind of AI plus utility plus safety. So it's a very unique sector now. And I think it's a very important place to be. So you've got that sort of outperforming the SPY over the last couple of weeks. And maybe, I think it eventually breaks out, right? I think this eventually gets back up here. So that's something that I'm watching. I want to see these moving averages kind of continue to start to curl up. We can see the middle Bollinger Band curling up. I want to see things. So I'll show you a chart in a moment that I kind of like the area, but I'm not being given the feeling that it's going yet. So for example, let's say, okay, here's materials versus SPY. Nothing much doing there. Here's communications versus the SPY XLC. So that's okay, right? Meta is going to be a big part of that. That's pretty good. I think that's a good area. And you've got sort of a nice upward sloping 200-day moving average on this relationship. That's what I'm going to keep an eye on. If it starts to break above here, that's where I might want to get involved in those kinds of stocks. XLE, I think it's an interesting place to chip away at because you've got a bit of energy. I don't love oil, but you've got energy and you've got some yield, right? These are just cash giants, these companies. And I think that's going to become important as rates come down. So I don't think it's a terrible place to be in. I have to admit that I don't love trading the energy stocks. I don't have the greatest feel in the world on it. So here's, the XLF financials. This is something that I think could do well as we enter into the fall. I would want to stay away from kind of, um, I think one of the things you're going to have to grapple with over the next couple of years is that there's going to be incredible disruption. And that's why you need folks like me and Mark and Andrew and Leisha, et cetera. Frank, we're watching this stuff and we're trying to think next level. And I think thinking next level is going to be outside of the box, if you want to use a cliche, is you're going to have companies that have big moats that are going to be in trouble, right? Why is cybersecurity suffering? Not that they're not going to be an unbelievable need, but AI may mow their lawn. Why are things like Salesforce not doing as well? That is an area where, CRM, the consulting business is going to be under threat at some point, right? GPT, a chat AI can do so much, right? So you kind of have to think of, what have been my favorite shorts that I've told you guys about. I hope you're watching Ticker Highlight. Fiverr has plunged like, I don't know, 30% since I mentioned it as a short. Upwork continues to plunge. You got to know where the puck is going, right? You got to know where the puck is going, and you got to stay away from the potholes. They're going to be potholes where you thought, "Holy moly!" And I'm invested in Palo Alto, so I'm taking a little hit there. So I'm going to have to sort of reconfigure my view of cybersecurity, right? It could be a great idea, but it may not be necessarily. I think it is. I think they're still okay because I think there's some, like, Palo Alto is really, they're pushing the AI side of things, right? So these guys aren't going to just sit here, right? Visa's not going to go, oh, well, let's hope for the best because stablecoin's coming to basically destroy our business. Companies are going to evolve. Salesforce is hopefully going to evolve. But think of the disruption. We have not seen this kind of disruption in stock markets, maybe ever. Internet, a little bit, but what was the internet? Oh, okay, I'm going to make your life easier. I'm going to put a lot of things online. Here's a lot of information. Here's, the computer. I'm going to, you can do spreadsheets now instead of having to, count things with your fingers and toes. Like that was amazing. This is different, right? This changes everything. And we don't know how it's going to work its way into things. And we're going to get, by the way, we're going to get squeezes that we haven't seen since 2021, since the late 90s. And that's why you want to look at Mark's scanning product. It is going to find those squeezes because as we look at, here, let me go here. Okay, so here's the breakout ratio. So this is what we've been talking about. We have this move. I called this move up to the red line. I said we're going to relax. This is fast money versus steady big cap tech money, which is the balance sheet heroes. They are doing all the right things. Quite frankly, if you want to play AI, that's probably not the worst way to play it. Is just bet on the companies that own everything. They own the franchise, and if another company is doing well, they're going to buy them, and they're going to either disappear them or use it or whatever, a la Mark Zuckerberg, right? So those companies are going to do great. But if you want to make the 500%, 300, 400, 500% trades, it's probably not going to be in a Microsoft, right? It's going to be in the stuff that we identify as this is big, and you are going to see a squeeze that you have not seen in a long time. And people are going to be shorting them, not smartly, and they're going to be getting killed because this is what can happen. This is a mania. This is a mania, right? And so right now we've broken out through this line, through this red line, which is the peaks going back to early 2023. We've hit levels that we haven't seen in 2.5 years on this relationship, which is showing you money moving into more kind of aggressive animal spirit types of areas. And we're pulling back a little bit here. So this is something that I'm watching. So my theory, my thesis is that this is recovering as it should, and it's going to start to push up into this area. Sure, it's moving, right? We've had some nice runs in some of these names, right? We've had some nice names. Surf Dance and Hogan, I'm not sure. I'm actually not sure about that. percentage of sales, that's revenue for ACN. Client can build their own CRMs. Yeah. So I think, yeah, the Gretzky plan. I love it, Markin. That's great. Skate to where the puck is going to be, not to where it is. We better be skating to where the puck is going to be in this new age. It's like you can bet on some things, like Cisco's doing well. They're back in the saddle, right? Building infrastructure like they did in the late 90s. Probably do okay, right? But there are going to be areas that are just so disrupted, you really need to kind of have eyes all around your head, right? Back of your head, side of your head, everywhere. So I think that we move up into here, and then it could be game on again. If we start breaking these highs, then I think it really is game on, melt up, melt up, melt up. So we're going to see something pretty special out there. And then I want to show you this as well. So here's your melt up in 2021. This is what this chart is showing you, is that it is how many of the top 100 S&P stocks, so big companies in the world, have inverted call skew. That means excitement, playing that upside, pushing up call pricing like there's a panic, right? You're covering shorts. You're going long. You're saying, I have to be involved. I don't care what it costs. That's mania behavior, right? That's mania behavior. Even though we've had a good run in AI, this has not spread to the rest of the market, and a true mania will spread to the rest of the market. And that's when your squeeze scanner is going to be like giving you, green alarms quite a bit. And it's also where we're going to make money in our turbo trades. We're just going to make money left, right, and center. So this is where you need to be prepared. And I'm watching, and we're already doing fantastic. We haven't had a losing turbo trade this year. We've closed a whole bunch over the last little while. Andrew was saying it the other day. I'm kind of on fire, right? So I've had like, I don't know, I think I've had 20, 25 wins, 1 loss, something like that, something crazy. No, maybe 1 other loss. So, but we cut those short, right? That's the key. You got to cut those short. That's why we have the ripcord in turbo income. We closed one for 35% loss. The rest are like 120, 150, 218, 250, 240, 80, 60, 70, right? Winning is cutting short the ones that are not giving you what you want and letting those other ones play out, right? Same old thing. Not telling you something you don't know. And it's something that we all struggle with. Let your winners run, address your losers quickly, have the hard conversation with your losers. Say, listen, we're going to have a talk. We're going to have a serious talk. Nobody wants to have that talk with the bad positions. So this is where we're seeing some amazing potential out there that could really, really push things. So as I continue to look around, I go, okay, where's our, growth has had an amazing run. So other sectors have been left for dead a little bit. Consumer discretionary kind of recovering a little. This is an area where we're seeing some weakness out there, right? We've seen weakness in the real economy. So the market is becoming a little bit, well, that's the thing, kept by God. Like you got to remember that this game, even if you're paying for a service, this game is not a volume game, right? We're not paid by the hour. I don't get paid by the hour. I get paid for making better decisions. And so you might end up in some trading service somewhere where they guarantee you a certain number of trades a week, and they churn them out like it's a machine, like it's a production line of trades. They're not being very thoughtful about it, right? When we started Turbo Income, I didn't do a trade for 3 weeks, and then I didn't have a loser for months, right? You don't just trade for the sake of it. You are paid for making good decisions and making money, right? You're not paid for, and I think traders have trouble with that, right? They have a tough time. They think like, wow, I'm here. I've been sitting here all day. I haven't done a trade. That's okay. So you missed a couple trades. You want to wait. You want to get that feeling in your head that, wow, this is a 4-star trade. This is a 5-star trade. I'm watching things develop, and now I'm getting really, really strong conviction. And so the scanner is going to be like that too. Yeah. it's not trading is a position. Sitting on your hands is a position. If you need to, literally put your hands under your butt and sit on them, or put your keyboard in the closet and watch and watch and wait, or have a professional tool that's going to tell you what to do, or professionals like myself or one of the other great team members to help you out. Don't feel pressure to do things. Trust the process. So that's the way it goes. You can sit around and do nothing for a while. So this is your healthcare, which has just been a train wreck. My goodness. So this is where I have a student who got involved in UNH. And I said, well, number one from my program, number one is you're getting involved in I know you're trying to catch a falling knife, but look at the sector, look at UNH, look at the sector. Is it giving you any compelling reason to get in? No, it's not. It's telling you there are cockroaches in the system. And so I may miss the bottom on healthcare, but I don't care. I want to get involved when it's not moving averages straight down, constant bad news, RFK Jr. retooling the whole healthcare system, Trump saying, you got to bring down costs, or you got to bring down the price of everything, or we're going to slap, tariffs on you if you don't, like, et cetera, et cetera. That's not an area I want to get involved in. That's different, right? If you're Warren Buffett and you go, well, okay, UNH, boy, it's, they're probably going to work out their problems, and it's one of the biggest healthcare companies in the world. They're involved in everyone, in everything, and every company. Then that's fine. You're making a valuation call. You're a value investor. As a trader, I'm not excited about this, except for maybe just a short-term bounce. Maybe I look at the option pricing and some sort of income trade makes sense, but I'm not even tempted to get involved. So you want the cruise ship to turn around and start giving you some compelling reasons to get involved. Now, this is starting, right? So consumer staples, at some point growth is maybe going to take a pause, and then consumer staples now above the middle of the Bollinger Band for the first time since April, right? Remember April, they did well because they were a place to hide. This is something I'm starting to go, oh, okay, interesting. I want to see things start to round up again. That's okay. If I don't pick the bottom, that's fine. But I want to see this start to create some positive momentum, maybe some divergence if you look at things like that, and maybe want to get involved in things that people just have to have, right? Colgates and things like that. So that's an area where I'm taking a look. But for now, the focus in the turbo area, I'm not putting a turbo on, Colgate Palmolive. Not yet, until I see some serious greens on there and some serious change in momentum. Here is where I think there's a massive amount of potential. So if I look at, so you got the SPY doing well today. Apple, which I keep saying they are one big announcement away from being back in the driver's seat. Here you go. It's starting to make the move. NVIDIA, of course, good. Google, I was short, and I started buying upside calls around 181, and I'm glad I did. So I'm getting constructive. They've got a great product. Apparently, I was never negative on Google. I just thought there's going to be a period here where maybe I can get it in the low hundreds because their search is getting killed. But apparently that's not the case. So we've reevaluated and we pivot. That's all. Simple as that. We've got Palantir, which we've been making tons of money on our turbos and other plays. Fantastic. We've got Reddit we've made money on earlier. Netflix looking good again. That's when we did an income trade on that, right? It's not giving me all my greens that I want to see, so we did an income trade. That's going to make us some really nice money. No turbo yet, though. And some of the power plays, VST, I think those are really big. I think Ethereum's looking pretty good again, right? You can see the outperformance of Ethereum versus Bitcoin. That's an area where I'm accumulating, I'm building, because that's useful, right? It's not just Bitcoin sits there. it's a store of wealth. It's actually has utility, right? So this is going to be a new phase before we finish of utility. It's not AI feeding training and teaching systems to do stuff. It is AI now moving into all areas of our lives, personally, industry-wise, company-wise, etc. That's why a company like Palantir is doing well. Everyone missed it. Josh Brown was like, I couldn't get myself to buy it, and I love him. You're missing the story. Their phones, like I presented on Special Situations, I said their phones are going to be ringing off the hook, and they're going to be turning business away. What did Karp say the other day? They're turning business away. Exactly what I said. And they don't even have a sales force. They don't even try to sell. They don't even try to sell. That is a new paradigm for software in the AI age. Is it stupid expensive? Yeah, it's worth more than Salesforce and ServiceNow combined. It makes a fraction of what they make. So ebb and flow, right? This is how the market's going to go. At some point, Palantir is probably going to drop 30, 40%. Don't know when that is, but strong stories in terms of where utility comes in to now move the needle for companies, right? I can pay $20 for ChatGPT and it's going to improve my productivity. That's unbelievable. That's unbelievable for companies. And it's going to be good for the rest of America as well at some point too, because you're going to have, it got you 20% overnight, Vicky. Yeah, it's awesome. It's awesome. It's an awesome stablecoin foundation. So that's about it, guys. Yeah, Christian's got the link up top if you want to get involved in Turbo Income. Salesforce is in trouble. They haven't realized it yet, probably a couple of years out. Yeah. Well, one of the things, Matt, man, is you're going to have companies that aren't necessarily in trouble, may not be an existential risk, but it is going to be a risk to profit margins, right? So you're going to have companies like Visa, if stablecoin really starts to mow their lawn in terms of a transactional threat, which it is. It is, right? It's, some people say, well, Ethereum takes longer for transactions. How can that be? It doesn't matter. Ethereum's the highway. They have layers. They have layers above that that take care of the speed for transactions. People are getting confused. Ethereum is not the actual transaction. It's the back office that upon which people are going to build things. So is Visa going to make its sick profits the same way as they did the last 20 years? Probably not. Salesforce probably doesn't go away. But when they have competition, are they going to make the same profits? So it's not necessarily like existential risk. It's a new world of what technology always does for people and always does for the economy, which is generally cut out middlemen, reduce costs, give you extra value, like an Uber, right? What did it do? And now you have cheaper taxis. It's a better product. It's easier to use. It's all these things. It didn't invent anything new. Taxis have been around forever. It just found a better way to do things, and it mowed all the other traditional taxi companies' lawns, right? So this is how things evolve. Blessed in financial. Yeah, I think financial stocks, I think Goldman does really well. I think those guys are going to be at the forefront of using this stuff to juice margins. That's an example where margin is going to improve. So think about that. A company like that is going to use AI to improve its margins through efficiency and productivity and, cost cutting, things like that. A company like Salesforce is going to have trouble because any recommendations today? Well, I like Apple. I like Apple. I think Apple's going to be in the right place at the right time. Let's put a trade on here. Even though it just rallied $20 off the lows, I think you could put on something like a September 220, 255, 270 butterfly for about $8. So, it's a trade I was recommending yesterday, but I think that could be kind of interesting. I think it does have the ability to pull back a little bit. So you might want to wait for a little pullback, or just, I would maybe get in for one contract, and then if it pulls back, you can add another, as long as it sort of holds some some decent technical levels. Like I wouldn't want to see it drop sort of below 215 or so. So I think Apple's kind of an interesting play. 879 is where this is marked. It's a broken wing, so you're buying the 220, 55, 70. So you're breaking it so that in case it goes for a really strong run, you're going to guarantee yourself a win, whereas regular fly wouldn't give you that win. So that's a little bit of a kind of little bit more complex play. Outside of that, let's see, what else would I do here? I think Tesla's actually really interesting. I think I think the options are really cheap. So I think what you could do is you could pick up like it's very skittish and it's hard to wrap your head around Tesla. But I think what you could do is something like this. I think you could pick up like a 410. This is going to get a little bit more expensive though. So let's make this a 440. I think you could pick up a Dees 440 call for about 15 bucks and a 215 put for $4. So the whole package for 19 bucks is going to give you something like this. This is what I call my Vega bailout. So we've got Tesla. I think it's going to probably break above this sort of coiling action here, above this trend line. You're going to go boom. And then, you know, it's an AI play. It's not a car company. So it's an AI play. The humanoid robots are coming, et cetera, et cetera. It's a little bit less of a, you know, kind of like I think NVIDIA's it's a kind of almost a sure thing in terms of what they do. But this is a play where you're going to get some nice delta, long 20 deltas. So this thing is going to do well as it goes up. But if it fails utterly and catastrophically, you're going to get bailed out by this extra put here because it's either going up $100 or it's going to go down $100. And right now, the option pricing, I'm not going to bring it up in December, but it's very, very cheap. It's as cheap as it's been in maybe years. So the December options are very, very cheap. Now, if you just wanted to make this very, very simple, what you could do is you could pick up an AUK 340, maybe. Nah, you know what? I think I'd go 350. This is going to be more kind of favorable capital wise, and sell like a 385. You do that for 10 bucks. You know what? Let's make this even better. So for $6, you can do a 350.70. $6 in AUK, you can do a 350.70. I think that probably does well. I'm going to get out of this position here. This one. Yeah, here's your vertical, right? So you can make to the upside. You've got $6 at risk, but I think you've got a pretty reasonable chance of making a good amount as this thing goes to 400, 420, somewhere around there. So that's another idea. CCJ, I still love. CCJ is really, really good. Circle can't get going, even though stablecoin has been doing well. Crowdweave, I think, is interesting. NBIS, which we're doing amazing on in Turbo Income. This is a trade that we're up huge on. This is where I said, listen, this is a cheap version of CoreWeave. When I put this trade out, I said, oh, 0DTE is waiting. When I put this trade out, I said, this NBIS is a cheap version of CoreWeave, and it's up like a ton since that. I already mentioned that to you guys. Okay, guys, I got to let you go. Have a good day. I'm not going to mark anything down here, but hopefully you guys got a few ideas there. We'll catch you later.